No matter which way we look at it, Bitcoin is entering its second year in the cycle, second year in the phase, second year from the low in 2022. This year usually brings on pretty decent gains for Bitcoin, but it's also a transitional year from Bitcoin into altcoins. In this video, let's look at the monthly returns for Bitcoin going forward, 6 months and 12 months, and put together a roadmap for 2024, looking at good times for Bitcoin and, of course, cryptocurrencies as well. This is your home of macro cycle analysis, studying the past to forecast the future. You guys know the deal here. And if you could, hit that like and subscribe. We're going to dive straight into today's video. I've got a lot of data to get through for you guys today, studying the 6 months returns going forward for Bitcoin from December into late May, early June, and then again 12 months ahead as well. So we're putting together a lot of data here for the longer term holds for BTC, letting us know some good times, some bad times, times when not to be in, times to get into USD, all that sort of stuff. So if you aren't following, make sure you do that, because this is a really solid series that I think I've been putting together here on the channel. It's helped me a lot in my own trading and investing. Hopefully it's helping you guys as well. So not only are we looking at this in relation to Bitcoin, but the macro cycles in the traditional stock markets as well, because this is going to dictate where the liquidity is, the cash coming into the game, and what stage of the cycle we're in. Are we in a macro bear market, or are we in a macro bull market? Are we seeing a short-term bear market like we did in 2022 and 2015, or are we seeing an overall bull market? So with that in mind, let's kick it off looking at the years themselves and then the monthly forward returns for those periods. And we can start to piece it together and give us an idea of the overall structure of this market. So I've got year one here. Basically, we've got the orange sections here. We're looking at year one. This is basically that year for Bitcoin. There have been some altcoins that did well, but remember, now there are millions of altcoins, probably dispersed between NFTs and dodgy projects and some that are doing okay things. But if you go on CoinMarketCap, there are millions of cryptos now. Back in 2017, we only had about, well, I say only, it ranged from 3,000 early on, got to about 20-odd thousand cryptocurrencies. So it really did increase there, but now it's just blown out of the water, just so many cryptos there. The orange here I'm looking at is the year for BTC. Year one, we'll call it. Year two is what we're going into. These things aren't meant to be applied extremely strictly, but for the sake of looking at the data, that's what we'll do today. But we have to understand that we need to be a little more fluid in how we interpret some of the data. Year one BTC, I've explained that. It looks like we're moving into year two. And in this year, we can see Bitcoin starts to, some of the money from Bitcoin and some of the money overall coming into the space leaves Bitcoin or just goes straight into altcoins. Year three, pretty self-explanatory. It's a year for altcoins. Basically, Bitcoin is still going to have some gains, but this is a time where the mania goes crazy. Well, the retail mania is up there. And this is the time when I think a lot of people consider it to be the bull market. For me and my analysis, the bull market starts from the low. I want a very key point in the market. The bull market has begun. A rise of 140% is the beginning of a bull market. This is just strictly speaking when we look at our technicals. But for the masses, the feeling still isn't there of a bull market. A bull market feels like a top. That's if you've been around for a long time. But if you're just new to the game, then you're probably waiting for that feeling. The thing that came, the thing that happened in 2021, when everyone's excited and you just see a lot of stuff pumping and just absolutely going nuts in very short amounts of time. That is the end stage. Basically, that's a symptom of what is going to come next, and that is your year four. Your year four is essentially the bear market, the period where you should probably be in US dollars or stable coins or whatever fiat currency you want to be in. But essentially, it's not typically a good year for Bitcoin. It's not a good year for altcoins, or if you want to call them cryptos, whatever. It's not a good year for any of that, because essentially the party is over and it's time to get out. But If we're only going by feeling, which the majority do, so it's always important to be aware of what the majority are feeling, because essentially they don't look at charts, they don't have a strict plan, they don't have anything measurable so that they can build on that next time. It's just a lot of fluff. They still expect the bull market to occur anytime through probably that fourth year, about halfway through that fourth year. So if we look back on 2021, that period was still seen as part of the bull market. You could pretty much say that anything around above 25 to above $30-ish thousand was still seen as the bull market, and it was just a matter of time until that bull market came back. And it wasn't until we got a big breakdown here through those significant lows where the feeling changed, and it really did slip into a bit of panic. We had denial, we had capitulation, and it got very, very sour. And this sour feeling typically remains throughout the time when we should be getting into the market. And that's why it's hard for many to differentiate between a bear and a bull market. So we've gone through each of these years now. We're looking at year 3 as being that altcoin year, pretty much the end of the bull market. But as you can see, I'm calling it a year, and I'm still saying it's the end, but it could be about 12 months. So it's a bit of a mind screw if you're only used to being in markets for very short periods of time. We're talking about longer term cycles here, 4 years, 8 years, 16 years. So I just want to take it back to have a look at a few more years before we get into the data, and just start it from the previous cycle as well. So year 1, Bitcoin, does it hold true to this model that we're putting together for BTC? Year 1, well, essentially that was all good for Bitcoin. There were some altcoins that popped off in that first run, but then when we came back and had that collapse in the second half of that first year, Bitcoin held up much better than the rest of the alts, but there was still a big move overall for Bitcoin and of course altcoins there throughout. But essentially that was the year for BTC. Year 2, that was Bitcoin's turn, and then altcoins started to take the gains towards the end of that year. We also had DeFi summer in the middle. So somewhere in the middle of year 2, which is also why you've probably seen me put together an 18-month overlay where you've got the bull market just split into 2 rather than 3, so that we can put multiple models together to give us an idea of the markets overall. It's okay to have multiple models as long as you understand how they work in the overall cycle. And so essentially all that model is just looking at the last half of the 3 years. Basically it's crazy. It's all on mania, etc. The first half, predominantly Bitcoin, but yes, there are going to be those a few altcoins that do pop off. And this time around, we've seen Injective, we've seen Render, we saw Solana as well, and of course, there's plenty of others out there. All right, so that's year 1. Year 2, yep, that holds true. We saw Bitcoin hold most of the gains here, and then started to roll over in that second half of the year for altcoins. And then, of course, 2022 was that year for the USD. We've gone through year 3. And then let's go back to the previous cycle of 2015, 16, 17. Year 1, well, that's an obvious Bitcoin accumulation. All you want is BTC in these years, not necessarily altcoins. But remember, we're starting to get a little bit earlier in the piece here for alts overall. Year 2, Bitcoin into altcoins. I want to have a look at some of the altcoins that were around in those days. You can see here XRP and ETH. This is going back now 7 years, and there weren't as many alts, and pretty much none of those have really survived since that point. Year 3, I mean, if you were here in 2017, you know it was just all out mania and craziness for ICOs in particular. So we had initial coin offerings, and that was the big thing there. And of course, that was all on Ethereum, and that pumped everything else up. And so altcoins were absolutely ballistic in that third year. And of course, fourth year would have been best to be in USD for that entire period there, which is essentially December to December. That's the best case of this December period. So looking forward, like we are going to do with the data, the 6-month returns for December into May, June of next year, 2024, and then the 12-month returns, and some really fantastic returns that I want to show you. So before that, is this still true? Well, year 1, that was for BTC. I don't know of any altcoins that have survived since 2011. And in terms of the year itself, I think there may have only been a handful, but I think they came a little later through 2012, 2013, and stuff we haven't heard of anymore is all those things that had the names with something coin at the end of it. And that was the mania through that period, because essentially you had Bitcoin and then everything else was trying to copy it with that name. So that was the craze through that first real bull market. So year 2, Bitcoin, as we said, it's supposed to go into altcoins. There weren't too many at that time, but then a few of them started to come around here, like your Doge, XRP, that are still around, but the majority of them you won't even know of. So don't even worry about that. There's year 2, and then year 3, there's your mania right into the peak. So that was a look at the models so that we could then put it together with the data. Because as I was putting together the data here, I want to come up with some other rules and strategies to keep us out of the market in the bad times and keep us in the market in the good times. This is essentially back testing a market so that we can have a more confirmed or have more understanding of our own trading plans. So if you happen to do the work yourself, it makes life so much easier. But if you just want to listen to what I've got here, by all means. So here are the returns. We're going to start all the way back at 2009, 2010. You can see we had a lot of green, more green, more green, more green. What does that look like on the chart? Well, there is your December through to December of 2010. Then you have 2011 here, 2012, 13, and 14, and so on. So you can see that they were positive, 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 positive. And then we had the negative year here. So that was through December 2013, all the year in 2014, and then through to 2015 as well, it was just 1%, negative 1%. And that's what we have here. So that was a pretty good accumulation year, which is why it's still under BTC. It wasn't one of these bad Bitcoin bear market years. It's negative 69, negative 60, negative 70, but it was still a flat year. I don't think after that you would be too upset if you were accumulating through that year underneath 300 bucks, looking pretty good there. But essentially we're just looking at the data here and whether we had some wins or losses through that period. Another win, there's a loss, a win, 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 a loss, and we've just had another win. Well, we got 3 days to go. If we were to collapse over 100% in 3 days, it'll be a loss. But I think most of us here would expect that this is going to be another win, which leads us into that second year, which, if we look at all the other second years here, they have all been very significant wins. And when we average these 3 out, we get 193% of an average win for that second year. Now that's obviously brought up by the first of the year 2s, which was 320%. So if we take a smaller average here, 97 and 61, that is going to give us an average of 129% for those 2 periods there. But remember, this 97% was coming off the back of a pretty flat year, -1. This next year was coming off the back of a 90% move. And our year 2 is now coming off the back of a 116% move. So basically the highest, or if you wanted to say the second highest first year that we've seen in Bitcoin's history. So that's the 12 monthly returns. They have all been positive for that second year. The negative times have all been in that year 4. So it's pretty straightforward so far. And looking at these 6 months, going from December to June, isn't as good as the 12 months. So if we did happen to buy on December 1st, hold it for 12 months, because we're in that year 2, that increases our chances of success over the next 12 months. Remember, there are no guarantees in trading or investing. All we're looking at are probabilities and trying to stack those on our side so that we can make the best decision now, because everyone in trading and investing, all we're doing is just trying to forecast what happens over the next set period. And if you don't have a set period in mind in terms of time, then it's really hard to decide when you should sell. And I know a lot of people try and stack it up and they say, I want to sell at a set price. But hopefully if you've been watching the channel for some time, you're starting to understand that time is far more important than trying to pick an exact price. There are very important prices, so don't take that the wrong way. Price is still important, and we can pinpoint key price resistance levels like monthly lower swing tops that may have some resistance showing up there. Obviously all-time highs that may have some resistance showing up there, just like we had when the market was coming out of this double top here at 25K, similar to some of these lower points on the way up as well. You can see that some resistance happens. Another double top, there's a 25K, it's the 32K, testing on those 32. So they're important. All I'm saying here is they're important price points as well, but we need to understand timing as well. There's no point saying that I'm only going to sell at 70 grand if you only want to hold this thing for the next 6 months, because it's probably unlikely that we would make it to 70 grand within 6 months. Not saying it can't happen, but it's just saying it's unlikely. So if we can mix those two together, it increases your probabilities of a success and firming up your own trading and investing plan. So let's look at the 6 monthly returns. We've had green, 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 red, red, green, green, red, and then we go on that nice little 3 years of green, 1 month, 1 year of red, and maybe we go on that path of the next 3 years of green again. So if we are in that stage, the next couple of years will likely be green just based on the past here, but they haven't been as good. If we look at year 2 compared to the 12 month, so there's the year 2, year 2, you can see that the 6 month returns here have not been as good as the 12 months. And of course, you might say, well, there's just more time in the market, so it's probably going to go up more. Sure, we could label that as well. There's no reason why we can't. In the past, there have been some other times where 6 months has been better than the 12 months because it starts to roll over at certain periods in the cycle. But what we're seeing at this stage in the cycle, especially for the year 2 coming up, is that it's probably, I'm not saying guaranteed, but it's probably better to hold for 12 months rather than 6 months. So if you wanted to throw money in the market and it's your rent money, highly suggest do not do that if you actually need this money. But some people talk about it like that and they say, well, I need this money back in 6 months. Looking just at the data, the facts, no opinion here. What's happened in the past is it's been better in this period of this stage of the cycle to hold for that 12 months rather than the 6 months. Nice and clear. I hope there's no confusion in that whatsoever. There's the year 2, 74%, held it a little bit longer, you got 320. 41%, held it longer, 97. 25%, that was the last 2 year there from 2019 to 2020, held a bit longer, you've got 161%. So is that going to happen again? Probability say it has a higher chance of happening again, but of course, no guarantees in the market. Now it's time to look at the data set. And I just noticed there was a little error here. I had 9 instead of 10. Forgive me there, but that was looking at this one here. And I would almost say that this should be 11 on 3 because, I mean, that's a flat year there. I think it's a good time to be buying, but I'll leave that up to you. That's only my own opinion. That's just looking at the data. So let's just keep it strict here as per the actual data of -1% for the entire year. It was actually -0.8, but nonetheless, 71% here on each of the occasions. For the 6 months, it is saying it's a good buy, and for the 12 months, it's also saying it's another good buy. So I would just list that here, the higher probabilities, it's a buy, but the 12 months does look like it's a much better option when we compare to the previous 6 months of that. So I just want to get rid of that buy for now and just leave it as this one here, because personally, I like this as an 11 and 3 with 14 data points here, because I don't really consider that one a complete loss. And this is how I'm using the data for my own personal investment portfolios. So there we sit, 79, 71, or call it 71 and 71. The data looks reasonably good for the next 6 to 12 months, especially when I consider what year we're currently in. If this model holds up, and it is true again, there's a lot of ifs because there are no guarantees in the market and we just have to play it as we see it coming out. So that's what we're looking at for BTC in terms of the next 6 to 12 months. The thing I'm excited about is looking at the overall cycle here and the years that we are currently moving into. So it seems like we're moving into year 2, which is that Bitcoin over into altcoins, potentially after that halving period, which is essentially what's happened in the past. We had the halving here in May. Altcoins had their DeFi summer, and then they started to go ballistic after that point. Then we can go back to 2016, and the halving was July. We hit that 50%, and then altcoins went a little crazy after that. Now, I also wanted to test that against XRP and ETH just to make sure that we aren't too biased in these results. So this is year 2. You can see Bitcoin went up, went flat, and then went up again. Basically, the flat was a reaccumulation at higher prices. This was XRP in the bars, and ETH is in the candles here. XRP went up at the beginning, went down, went flat, and then also went flat again, or basically flattened down into 2016, and then took off from that point. As for ETH was up in the first half, came back down, and then took off in that year 3 of the alts. So although we're looking at it's a transitional year from Bitcoin into altcoins, some of the alts went first, at least going back 2 cycles. Then they came back, and then the third year was the real big year where it was on for young and old in altcoins. So be wary of next year. I still think it's a transitional year into some alts, but you'll see them, some will pop off, some won't. That's what happened in the previous cycle as well, which is why I've pointed out the DeFi summer. Bitcoin was also going up. The DeFi projects went up. They came back and then didn't really have a great third year altcoin run when you compare it to the rest of the altcoin narratives that were going off in that year. But for Bitcoin, you can see Bitcoin was basically flat through that whole year, even though there was a lot of emotion to the upside, the upside, and the downside again. For ETH and XRP, even XRP had a little bit of a run at the end of that second year before the SEC sued them, and they only managed another run in that first half of 2021, whereas Ethereum, we know, went nuts all the way up to nearly 4,000, collapsed, and then all the way up to nearly 5,000, and then collapsed from that point down to 900 in the bear market. So for XRP, it's basically been flat as well. So potentially, this is what we're looking at here, Bitcoin into altcoins in this next year, the year 2 of the cycle. The monthly returns are looking relatively healthy here for this stage of the cycle, that year 2. But beware, that year 4 is not such a good year for the whole holding period. Now, almost no matter which month we decide to buy, that 12-month period looks pretty bad. And just as a little extra that I'll throw in at the end here, the Shemitah year is not so good either. Now, if you're unaware of that or have no idea, that's fine. We'll talk about it in future videos. I'm just bringing it up in case you want to go and research something else. And looking at the next Shemitah years, late 2028 into late 2029 are the next Shemitah years. We're a long way off those years. Let's just focus on next year, looking pretty healthy for Bitcoin, healthy for cryptos, good average returns overall for Bitcoin and cryptos throughout that year. I think we're going to see some pop off, some wait for that second half to pop off. So it's going to be a little bit of a shuffle between Bitcoin and alts as we ramp up for that third year where everything gets super exciting. And we could probably pretty much put that down to roughly 2025. Do note, 2026, we reserve the right to update this throughout 2026 because we got some big cycle endings coming around later in this decade. Like and subscribe, link in the top of the video description, if we can find it, is for our free 7-day trial of the TIA Gann Swing Indicator, and Cyber Monday sales are about to end. Trust you got a lot of value from the video and you've got some homework until the next one, but until then, take care and peace out.